Guys, welcome to my channel, Just the Chat. On today's video, I'll be teaching you a very simple but reliable strategy. It is a strategy that is very consistent. I have tested it for years and I'm using it, and it is profitable on a long run. Okay, this strategy is one you can use on all markets, on your forex markets, on your synthetic market. I mean, this volatility index. Volatility index is being offered by a broker called Deriv. To have an account with them, if you don't have an account with them, you can register with my link on the description of this video. They are the only one that offers synthetic index. You can also use it to trade your crypto market. You can use it for your Nasdaq. Just name them. It is very simple and reliable. Just understand what I'm going to teach you. If you don't have your jotter and pen, please hold one now. Just go get a jotter and get a pen. Okay, so if you are new to my channel, my name is Fearless. I will advise you click on the subscribe button now. As I'm talking to you, click on the subscribe button and turn on the notification bell as we upload videos, so you will be alerted. I produce video that helps trader to in order to make profit, in order for them to be profitable on a long run on the trading journey. Okay, so without wasting much time, let us get to why we are here today, which is the strategy I'm going to expose to you. The first you must understand is a bullish market is what type of market? It's a market that gives an impulsive movement upward, then a correction downward. What do I mean? This is a bullish market. A bullish market is one that does this. Just watch me clearly. A bullish market is one that does this: an impulsive movement upward, a correction downward, an impulsive movement upward, a correction downward, an impulsive movement upward, a correction downward, impulsive correction. That is how to know what a bullish market. That is what a bullish market. A bullish market is one that moves up, down, up, down, up, down, but it is moving upward. While a bear market is one that does what? A bear market is one that does opposite of a bullish market. A bearish market is a market that moves downward, then a correction upward, moves downward, breaking the last low, then a correction upward, downward, a correction upward, downward, a correction upward, downward, then you have a correction down, correction down, correction down. That is how a bear market moves. Okay, so just look at this chart currently. The part you are seeing now, I'm talking about this part. What are you seeing? Is this a bullish or a bearish market? This is a bearish market, because why? It is giving us what? An impulsive, a correction, impulsive, a correction, then impulsive, a correction, then impulsive. You get it? That is how this one is currently moving. Sorry about my drawings. Okay, so the next thing to note in this strategy is number two is we have two patterns. I have two patterns for this strategy I follow. I have two patterns that occur every day in the market. They occur every day. There are two patterns that you must watch out for because they are happening every day. Let me go to a higher time frames. Excuse me. This you can use it on all time frame. As a swing trader, as a day trader, even as a scalper, you can make use of this strategy and make money from the market. Make use of strategy and make what? Money from the market. Okay, there are two patterns as I'm talking as I said. Okay, there are two patterns as I said. The first pattern is the A pattern. The A pattern is just like this, what you are seeing on the screen. The movement up, then movement downward. I call it the A. You can call it whatever you want, but I call it the A pattern. Moves up and down. It moves up and down. That's the A pattern. It moves up and down. It moves up and down. This is the A pattern. You can follow either the movement upwards and follow the movement downward, but I will advise you follow one movement. You wait for this movement to finish, then you follow the other. So how do you notice this? How do you follow the other movement? It is very simple. As I told you, a bullish market is a market that moves up, down for correction, impulsive movement upward, down, then down for correction. Okay, as you can see, let me bring out the brush. Okay, let me bring out a brush to explain this. This is a movement upward, correction downward, upward, a correction downward. Are you seeing upward, a correction downward, then upward, a correction downward on this A pattern? Then all you have to do, it is very cheap and simple. wait for what? Wait for a break. Wait for a break of pattern. Wait for a break of what? I said wait for a break of pattern. Let me explain this on a live chart. Let me explain this on what has happened in the past. Let me explain this on this current chart that I currently seeing. Let me explain. Hold on. Let me delete this. Let me take them out. Let me take everything. Let me take all the drawings out now. Okay. Are you currently seeing this chart? This is a half four chart. Let me show you what I'm talking about. This is the same movement I'm talking about. Please watch here. Just watch this point. You see a break of that point. You see, then we have a correction back to that point. Then we have an impulsive movement of correction. Then we have an impulsive then correction here. Then we have an impulsive movement, a correction, impulsive movement, a correction. All we have to do, we have sometimes you have to let go of this. It depends on the type of trader you are. If you are looking for, you know that you are a day trader, you have to allow one movement go, then follow the other. I advise people to follow the others. That's what I use. I follow the other movement. I wait carefully because I pick it from the beginning. Immediately it starts, I pick it. Immediately the movement starts, I just make use of it. So it is very very simple. Let me explain this on a rough chart. Let me explain it with drawings. Hold on, let me explain it. Okay, this is what I mean. This is the A pattern. I'm following the A pattern now. This is the A pattern I'm talking about. You have to wait for one movement to start. As you can see, it is moving. This is an uptrend, an impulsive movement up, a correction downward. And if we are to follow this, we should have followed it from. All we have to do is be patient. Wait for this first move to go up, then wait for a correction. Then when you see a breakout, I'm talking about this breakout now. Are you seeing this breakout? You have all you have to do is wait for a breakout and a retest. A breakout. After you see this breakout, you saw a retest back to this point, then you saw a continuation, then just follow this movement. Followed it from this point. There are different opportunities you should have made from this. This is the first opportunity. This is the second opportunity here. This is the first. Follow. This is the first. This is invalid. This first one is invalid because this is not relevant. All we are waiting for is for a break, then a retest, then continuation, then a retest. We take it, make advantage of it, then a impulsive movement, then correction. Make use of this again. This is a third movement. This is the fourth you should have made use. But most times when this happens, it makes up to three. So you can leave the fourth one. It's always creates more than three. So just make it the first three are active, are the most active. Use the word. Let's say the first three are what the most active. The first three correction movements are the most active. After a breakout and a retest, the next three are the most active. They are the what most active. Please jot that down. After a breakout, the next three are most active. As you can see, this movement upward. This is the same pattern I told you, the A pattern. This is movement upward. So how do you catch the movement downward? The A pattern. It is very very simple to catch the next movement downward. It is very very cheap and simple. Cheap and very very simple. All you have to do is the same thing that happened here. You wait for a breakout. Whenever you see a breakout and you're on, let's say you mistakenly enter a buy, you see a breakout, it is advisable you cut the trade off. When you see a breakout here, all you have to do is to wait for a correction. When you see a break like this, when you see a correction here, then you see a rejection candle, let's say on the 30 minutes time frame, on whatever time frame you are using, whatever type of trader you are, you wait for what that rejection candle. When you see a rejection, you take it from this up, you take it from here. Then your stop loss should be very, very not that far, not that far. Because this strategy is also one that gives you a very low stop loss with a high profit. So when you take a sell, you should take a sell from this point downward. Your take profit should be nothing less than here. Should be your take profit. Then you see this movement after a breakout from here, a retest, then a continuation. Don't worry, I will explain this on the live chart as well. Then you see a movement downward. The next you should be expecting a correction downward, a correction downward, a correction downward, a correction. Probably you see a breakout, then it continues like this. Is how the market moves. This is how the market moves. The breakout that you get, that's how the market moves. So this market, they print themselves every day. All you have to do is wait for what a breakout, then follow it. Breakout. Look at this is what this is the A pattern. Trading the A pattern now. This is the A pattern. So let us go to a live chart where I explain this with your candlesticks. Okay. Okay, this is a live chart now. This is our live chart that is currently moving. What do I simply mean by the A pattern, which I just explained? You wait for a breakout. Is that you catch the movement up or you catch the movement down? Just patiently wait for one to catch. This happens every day. As a scalper, you can see this on lower time frame on 5 minutes, on your 2 minutes, on your 15 minutes, on your 1 minute. As a scalper, you can see them. Then on as a swing trader, you can see this on your daily chart, you can see this on your weekly chart, you can see this on your monthly chart. Sorry, as a swing trader, yes, you can see it on your daily charts, your weekly and your monthly chart. While as a day trader, you can see this on your 4 hour, 1, 30 minutes time frame, your daily candle. They are all there, they all print there. Every day this pattern occurs. Okay, so it is very, very simple, cheap, and reliable to use. So what I was explaining there on that chart, let me, okay, I will need to zoom out, zoom out, zoom out. Okay, this is it. This is it. I told you there are two patterns. The A pattern is either you follow the A pattern or you follow what the V pattern. I'm explaining the A pattern now. Okay, this is currently the A pattern. This is the A pattern. As you can see, the market is moving up. It moves up. Then we are seeing a downward movement now. So to make use of this, this was what happened on the movement. You can see this first place here. Are you seeing this? Are you seeing this? We saw a breakout. Look at, we saw a downward movement, then we saw this. Are you seeing this? So what you should do at this point, if this occurs following any of this pattern, it is a wait for what? A retest back to this point, a retest back to here. You can see it market drags down for a retest. Are you seeing this retest? I told you the first theory correction are the most accurate. They are the most strongest. They are likely to be respected. They are likely to happen. They are likely to take place. They are likely to hit your take profit. Okay. So as you can see, the first correction here, then it moves backward, then you see another correction, another entry here again, then what, it moves up again, and you can see it came down, another correction here. Are you seeing this? Another correction here. Are you seeing this? Another correction. This is the 1 2 3, or let's say we can even use this 1 2, wait for the third one. Standard correction downward here, coming back down to this our last point. Then you see this very, very massive impulsive movement to the upside. Then I see under correction here, but I don't trade this one. This is about let's say, let's count 1 2 3 4. This is the fifth one. It is not that reliable. I don't joke with, I don't play, I don't enter such trade. I wait for it to come down to the downside. Okay, so it is very, very simple to use, very, very simple to apply. So as I was saying, what do I mean? You wait for the movement downward. How do you wait for the movement downward? All we need to see now is a break of this fifth point. All we need to see is a break of this point. All we need to see is a break of this point and a retest, a break and a retest. This is a live chart. We took this signal on our signal channel. To join our signal channel, uh, the signal link is on the description of this video. I drop analysis every day on that signal channel. Okay, as you can see, it returned back here for a retest. It returns back here for a retest. Then what are we seeing? I've seen the pull down. So I told you, when you see the retest here, then you see concern, depending on the time frame you are following, when you see a retest, all you have to wait is for a candle rejection. Okay, candle rejection. You also understand the candlestick, your candlestick. You have to understand rejection candle. You don't need to master all the candle, just know the few candles, the rejection candle. Okay, just know the bullish candle and the bearish candle. Okay, very, very simple to understand. So I was saying, let me zoom in. Let's zoom in. Are you seeing it? Are you seeing it? Very, very clear. All you have to do, all you have to wait for is the first breakout, which is here. Wait for the first breakout and the retest. Always wait for a retest. Always wait for a retest. That is our entry. Are you seeing it? Are you seeing this? There's a retest here, and now we are having a poor downward. After a breakout, it has been moving up. Now, this is the what? This is the A pattern. Are you seeing it is moving down now? All we have to do again, it is to wait another correction which surely take place. Don't rush the market, okay? You don't have to rush the market. The market is there 24/7. You can always trade. Just be patient with the market to give you what you want. Wait for the market to get to where you want it to get to. Control the market with your own strategy. Don't allow the market control you. Though trade what you see. That is why I'm giving this strategy. This strategy is one of the best strategies that explain trade what you see. Okay. So all you have to do now is to wait for another retracement back here, and then follow it downward, retracement downward, impulse, correction, sorry, then impulse, correction, impulse. You get what I'm saying? It is that very, very cheap to follow, very, very cheap, and very understandable. You get? Let me zoom out. Let me show you my next prediction. Let me show you where this market is coming to. This market, after breaking this, I'm expecting this market is coming down to this point. It's coming down to here. It's coming here. after seeing these breakouts here, and that's giving us a clear move for after this is our first entry point, our first entry point on this strategy, our first entry point. Then stop loss should be very close up above the candlesticks. This is the candlestick. Let me show you the candlestick rejection I said earlier. I would love to zoom in. Let me zoom in so that you can get the whole understanding about this strategy. It's very cheap, and it is very simple to understand and reliable. Simple but reliable. This is it. Are you seeing this candlestick rejection? I'm talking about this candlestick, this bearish engulfing. This candle is called a bearish engulfing. Come in, let me bring out the brush to cycle that part. This is what I'm talking about. This candle, this candle, this candle. Talking about this candle now. This candle. Are you seeing it? These two candles that are called bearish engulfing. It is a set candle. It is a very nice set candle. So upon seeing this, for you to take yourself from this point, your stop loss should be just little above the candle, very little stop loss. Then take profits should be down below the last entry point, be down below the last correction, which is here. It is our take profit must have been hit by now if we took this trade. So it is very simple. If you miss this, it is very simple. You can still wait for the next move. This is the next move that is going to happen. It is bound to happen. The third move has not occurred. This is just the first one. So there's a lot of opportunity here on this trade now with this strategy. We still have about two move left. We still have about 2 to 3 move left with this strategy. This is it. All you should wait for now is very straightforward. Is to wait for what? A movement up for a retest, then a continuation. This should be your next entry. This should be your next entry. Then another one should be something like as this. Then downward. I told you. Are you seeing it? This is what you should be waiting for next. Very simple to use. This strategy is one that follows price action. That is why it is one of the best strategies you can ever get. One of the best strategies you can ever use. So, without wasting much time, let me explain the V pattern. Remember, I told you there are two patterns to this strategy. There are two patterns: the A pattern and the what and the V pattern. Okay, okay. As I said, we've just talked about the A pattern. This is the V patterns now. The V pattern is similar to the A pattern, but the V pattern is used for a buy trend. If you want to catch the buy move, this patterns occurs every day. Let's say you see a market that is currently on let's say on the A pattern, it is coming down like the one we just saw that was coming down, then all we have to wait for is a breakout. This is a breakout here. The breakout just occurs here. Are you seeing the breakout? Then we have a retest. You have to wait for this retest. I repeat, always wait for what? The retest. Then we have a retest of this point. Are you seeing the retest? It's our first entry. Then we have an upward movement, then another retracement, a correction. Then we have an upward movement, then another correction here, then another upward movement. You see, just make use of all this. Let's say you go to the market after all the movement have been done. This is one move. This is the second, let's say the second, the third move. I always told you the three first move are the most accurate and the most valid. This is the fourth move. So at this point, you should just go to the market and wait for a break of a continuation of what? Of a new pattern, which is the V pattern. So all you have to do, you see the first breakout here, you wait patiently for a retest, wait for your candlestick rejection, then boom, follow it. I can assure you this strategy is 90% accurate. 90% accurate. I have tested it, I have used it, and I'm still using it. This is what even the institutional bank use. So please try to master this strategy. Practice it with your demo account before using it on live account. You can practice for, let's say, for 1 month. Do your practice with it and just see the result ratio. I am telling you, it is very profitable. You will come back and say me thank you. Okay, so let's see this on the live chart. Let's see how to trade the V pattern on the live chart. Where to place your stop loss and your take profit. Okay, as I told you, let us look at it on the live chart now. um this is a good move here already. Uh let me show you with this brush. This is a brush. As I told you, we are looking at what the V pattern on the live chart. The V pattern on the live chart for a buy. As you can currently see, the price came here. We saw a break of here. As I told you, always take the first three movements. Okay, so the guy, it drags back upward here for a correction. We saw a second candle, a very bearish engulfing, and that is it. at how we should take our sell downward, and you can see it has been pouring down since then. Look at it, gave us different sell opportunity, different sell opportunities. It keeps give printing sell opportunities. I told you, take the first three, 1 2 3 4, they are most active. Leave the list, the fourth and the fifth one, they are not active. Most time they get broken easily, and they might all give you losses, but the first three are the most active. Whenever you don't see the first three, don't take the trade. Write this down. Whenever you don't see the first trade, don't take the trade. When you come in and it's on the first, congratulations. When you come in and on the second, congratulations. When you come in and you're on the third, congratulations. But when you come down on the fourth, you have to be very, very careful and cautious. Okay. So as you can see, after the move downward here, so I told you we're talking about the V pattern. Then this is a V pattern. Coming back to here, I told you must wait for a breakout and a retest. A breakout and a retest. That is how this strategy works. Wait for a breakout and a what? A retest. Price came here, it was not a clear breakout. As you can see, it drags downward here, and it gave us this the first one, but it was not clear. It is very fine. Wait and to see the next movement where it's going to. You don't have to rush the market. Wait for the next movement and see where it's going to. As you can see, it did another impulsive movement, then it gave correction. Perfect entry, perfect and sweet, nice, a very good entry. You enter from here, stop loss here. You can even aim. You take profit at this point here. Come in, just excuse me. You can aim your profit at this point, at this top here, at this top point. As you can see at this top, you can aim your profit at this top point here. So you can take your put your stop loss here. This is it. As you can see, it gave us another entry here again. Did a little retest and continuation. This strategy works on all time frame, all market, and it is very, very, very reliable. It is very reliable, one of the best strategy you can ever get your hands on. Go and test it. I repeat, go and test this strategy and come back with feedback. Don't forget to subscribe to this channel now. Subscribe, and subscribe. Okay. Okay. Okay, remember, blessed until we see again. There are things you must know about this strategy. The first you must know is identify what? Identify if it's a bullish trend or a bearish trend. Then wait for the next move to occur, either a V or an A pattern. Then follow it. Wait for a retest. Remember, blessed. Practice this strategy. Practice and practice until you become best. It works on all pair. It works on all indices. It works on all markets. Okay, so remember, blessed for now. Until we meet again, I remain fearless. Bye for now.